A very good morning to all our students. So we have already discussed how to provide the impairment loss on individual assets. So we already discussed one problem with regard to how to provide impairment loss on group of assets in cash generating units. Now let's see how to provide impairment loss on corporate assets. The corporate assets are divided into two types: allocable corporate assets and non-allocable corporate assets. So we cannot find out the value in use of the corporate assets. Corporate assets means example office building or corporate office headquarters. So all these are comes under the definition of corporate assets. So we cannot able to find out the how much cash flow generating by the these office buildings or administrative buildings. So without value in use, I cannot provide the I cannot calculate the impairment loss of this individual assets. So that's why what we are going to do, we will allocate these corporate assets to CGUs. So first aspect is I cannot able to find out value in use for few respective assets. So that's why those assets are grouped into CGUs, group of assets, cash generating units. Now these corporate assets also should be included in the CGU. Then we can able to find out the impairment loss for the entire CGU after allocation of the corporate assets. Then the resulting impairment loss should be allocated to the corporate assets and the individual assets in the group. So in the corporate assets, out of all our corporate assets, there is allocable and non-allocable. For few corporate assets, we cannot allocate to the CGUs in the respective carrying ratio. In that case, I need to find out the entire organization value in use. Entire organization, how much cash flows those are going to be generated in the future. So that should be compared to the all the carrying amounts of the assets in the organization. Then I got the total impairment loss of the organization, that the total impairment loss should be allocated between allocable, non-allocable as well as individual corporate assets. So let's see how to do that. So I already discussed this how to provide the impairment loss on CGU. Then let's see the problem of how to allocate the impairment loss on corporate assets. So India is 36. Please open question number 7, I think. Yeah. No, 1 minute. Yeah, it's question number 6. Please open question number 6. So let's read out the question first, then we will look into the answer. 1 minute. I think screen is not sharing. Okay. Okay now. So question number 6. So ABC Limited has 3 cabinets A, B and C. The carrying amounts of which are as follows. So they are giving the how many cash generating units are there in ABC Limited? 3 generating units. The carrying amount of which are, so the carrying amount of cash generating units are given. So 500, 750 and as well as 1100. So what is the remaining useful life? Means the cash generating unit of A, I can able to provide the cash flows to the organization for 10 years. With B, I can provide cash flows to the organization up to 20 years, and with C up to 20 years. So if the useful lives is not mentioned separately, even though mentioned all the useful lives of the all CGUs are equal, then there is no problem. But there the problem arises when the remaining useful life is indifferent. So we'll tell you, wait. So the ABC Limited has two corporate assets having remaining useful life of 20 years. So there are, in ABC Limited, there is 3 CGUs. There are two corporate assets. Let's see, corporate assets are divided into two types, allocable and non-allocable. So corporate asset X is allocable corporate assets. Allocable corporate asset means this 600 can be allocated to the carrying amounts of allocated to cash generating units of A and B and C in their carrying amounts generally. But here the remaining useful lives is also there. So this 600 should be allocated to A, B and C in their ratio of carrying amount into remaining useful life. Then it is non-allocable corporate asset. Why? It is a non-allocable because the carrying amount of X can be allocated on reasonable basis to the individual cash generating units, that is pro rata basis. Let's see in which ratio, that is the main problem. So which ratio I should allocate this corporate asset X to the cash generating units. So what is meant by allocation, that and all, wait, will tell you. And then carrying amount of non-allocable asset Y. The carrying amount of Y cannot be allocated on a reasonable basis to the individual cash generating units. Then recoverable amounts of cash generating A, B and C and ABC Limited. So rupees in crores. So 600, 900, ABC 1400, ABC Limited 3200. Then calculate the impairment loss, if any, and ignore the decimals. So I need to calculate the impairment loss for the cash generating units as well as the corporate assets. So first, let's find out the impairment loss for allocable corporate assets. So I need to calculate the impairment loss for the allocable corporate assets. How many allocable corporate assets are there? 1. So let's put the carrying amounts of the cash generating unit first. Carrying amounts of CGUs before allocation of corporate assets. So these are the carrying amounts of the CGUs before allocation of the carrying amount of the corporate assets, 500, 750 and 1100. And what is the useful life? 10, 20 and 20. So the proportion for allocation 5,000, 15,000 and 22,000. So the corporate asset X should be allocated in the ratio of 5 is to 15 is to 22. 5 is to 15 is to 22. So if useful life of the CGUs are not given in the question, in that case the allocable ratio should be carrying amount ratio. But here the useful lives are given. If the useful lives of the CGUs are given in the question, the proportion for allocation is carrying amount into useful life. So this 600 crores, the carrying amount of corporate asset X should be allocated to A, B and C in the ratio of 5 is to 15 is to 22. So 600 divided by 42 into 5, 600 divided by 42 into 15 into 22. Then I got these are the allocation of this 600 crores to the A, B and C. Then I got the corporate asset after allocation. So what is the original carrying value before allocation? 500. And what is the share of the corporate asset? 71. So 750 plus 214 and 1100 plus 315. Then I got 571, 964 and 1415. And what are the recoverable amounts of the? So I got the carrying amounts of CGU A, B and C, right? And what are the recoverable amounts of CGU A and B and C? So it has been given in the question 600, 900 and 1400. So this should be compared. What is the impairment loss formula? Carrying amount minus recoverable amount. Then there is no impairment of CGUA because recoverable amount is more than the carrying amount. And here this 900. What about this 900? So 964 minus 900, it is 64. 1415 minus 1400, it is 15. Now this 64 impairment loss should be allocated to corporate, CGUB, and as well as corporate asset. And this 15 rupees of, sorry, this 15 crores of CGU, this 15 crores of CGU should be allocated between CGU U and as well as corporate asset X. Okay, in which ratio? Now tell me the ratio. In the ratio of their carrying amounts. So what is the total carrying amount? 964. Out of this 964, what is the carrying amount of CGU B? 750 and corporate asset X 214. So in this ratio, 740 into 214 ratio, this 64 impairment loss should be allocated between CGU B and as well as corporate asset X. Then coming to this 15 crores of impairment loss should be allocated between corporate asset, corporate asset X 315 and as well as CGU C 1100. This 15 of impairment loss should be allocated between CGU XC and corporate asset X. The ratio of 1100 into 315. So these are the carrying amounts. These are the carrying amounts of the total carrying amount. Okay. Then step 1 is completed. So I can able to find out the impairment loss for the, I have provided impairment loss on corporate assets. What is the impairment loss for the corporate asset? 14 plus 3, 17. Then what is the impairment loss for the non-allocable assets? So before going to that, we are solving this problem by step by step. What is the step 1? Calculation of the impairment loss for the allocable corporate assets. These are the impairment losses. Let's find out the carrying amounts of the CGUs and as well as our corporate asset X after impairment loss calculated under step 1. So calculation of closing carrying amount after impairment loss calculated under step 1. So A, B, C and X. These are the carrying amount before impairment loss. What are the carrying amounts? 500, 750, 1100 as well as what is the carrying amount of the X? 600. What is the impairment loss? There is no impairment loss for A, and B it is 50 and C it is 12 and X it is 17. So B it is 50 and C it is 12. So for X it is 17 of the impairment loss. So the carrying amount after impairment loss equal to 1 minus 2. So 1100 minus 12, 1088 and 600 minus 17 is 583. So what is the total carrying amount? What is the total carrying amount after impairment loss? 2871 crores. Then let's find out the impairment loss for unallocable corporate assets. What is the unallocable corporate asset? Corporate asset Y. So the total carrying amount of all the assets of ABC Limited equal to, so the total carrying amount after impairment loss 2871 with respect to these four assets. What is the remaining? The remaining asset is Y. What is the carrying amount of Y? 200. So I got the total carrying amount of all the assets of ABC, all the assets of ABC Limited 3071 crores. 3071 crores. Then what is the total recoverable amount of ABC Limited? What is the total recoverable amount of ABC Limited? 3200. 3200. So what is the impairment loss of ABC Limited? What is the impairment loss of ABC Limited? There is no impairment loss should be provided as a whole organization. So we can stop the problem here itself. There is no need to provide the impairment loss for the whole organization. There is no need to, if at all, if impairment loss is there, this impairment loss should be allocated between, okay, remaining assets. This allocated loss should be allocated between remaining assets and corporate asset Y. So this is remaining assets. So what is asset Y? Okay. So if at all there is no impairment loss for the whole organization, so if at all impairment loss is there, this impairment loss should be allocated between remaining corporate asset and corporate asset Y in their carrying amounts. Okay. Here these are the carrying amounts. So after step 1, these are the carrying amounts. 500, 700, 1 minute. Okay then. Then so we have completed impairment loss for corporate asset, allocable and non-allocable. Okay. Let's see the problems of calculation of the carrying amounts of the assets at the end of the reporting date. So calculation of the carrying amounts for every year ending. So if you wanted to solve this problem, you should have the knowledge of Ind AS 16 also. So you should remember the format as given in the Ind AS 16. 1 minute. Okay. Question number 7. So Coel Limited acquired a machine on 1st April 2017 for 14 crores that had an estimated useful life of 7 years. So Coel Limited acquired a machine on 1st April. So the PPE is acquired on 1st April 2017. So for the initial acquisition, PPE should be recorded at cost. What is the cost? 1400 crores. So the carrying amount as on 1st April 2017, 14 crores. Then what is the useful life of the machinery? 7 years. The machinery is depreciated on SLM basis, straight line method basis. Does not carry any residual value. So the residual value is 0. The residual value is 0. Then on 1st April 21, the carrying value of the machine was reassessed at 10.20 crores. The carrying value of the machine was reassessed at 10.20 crores as on 1st April 21. And the surplus arising out of revaluation being credited to revaluation reserve. So what is given on 1st April 21? So we are saying that the carrying amount is reassessed, means the revaluation has done on 1st April 21. So the fair value of the machinery as on 1st April 21 is 10.20 crores. So first I need to find out the what is the opening carrying amount as on 1st April 21 before effect of the revaluation. So let's find out. I just have the data of what is the carrying amount of machinery on April 17, 14 crores. So I need the opening carrying amount. It is 1421. It means the closing carrying amount of the machine as on 31st March 21. So if I provided depreciation for 4 years, so 17 18, 17 18, 18 19, 19 20, 20 21. So I need to provide 4 years depreciation. Then I got the carrying amounts, closing carrying amount of the machine as on 31st March 21. So opening carrying amount 14 crores minus depreciation for 4 years. So 14 minus 0 divided by, so what is the depreciation formula? So carrying amount minus the two opening carrying amount minus residual value. Here the given residual value is 0. Okay. Divided by expected useful life. What is the expected useful life? 7 years. So then I got the depreciation per annum. Now I wanted to provide depreciation for 4 years side. Then I need to do multiplied with 4. So then I got 8 crores. So what is the closing carrying amount of the mission on 31st March 21? 6 crores. So if it is a closing for 31st March 21, then it becomes the opening for 1/4/20, 6 crores. And so what is the fair value of machinery as on 1st April 21? 10.20. What is the carrying value? 6 crores. Then what is the revaluation gain? 10.20 minus, this is fair value. Okay. So always I need to provide the revaluation at the beginning of the year. So fair value 10.20 minus carrying value 6. So I need to give revaluation gain of 4.20. Then the asset becomes 10.20 after including of revaluation gain 4.20. How you got this revaluation gain? Opening carrying amount as an 1/4/21. Okay, fair value minus 10.20 minus carrying amount 6 crores. And I got the fair value gain of 4.20 crores. So this is opening carrying amount before effect of revaluation. Then I gave the effect of revaluation. I got the opening carrying amount after revaluation 10.20 crores. Then let's see what happened. So this 10.20 crores, let's see what is the revaluation gain. 4.20. This 4.20 should be transferred to OCA, because as per the information given in the question, there is no previously impairment loss. So the entire gain should be transferred to OCA. Then what is the OCA balance as on 1/4/21? This is nothing but 4.2 crores. So let it be. Then let's go for further step. So opening carrying amount after revaluation 10.20 crores. So next for the year ended, then what is the next date? So they are given the information. So revaluation made on April 21. Then he came directly on 31st March 2023. So conditions indicating an impairment of the mission existed and the amount recoverable ascertained to be only 1.8 crores. What information they are giving? So for the year ended 31st March 23, the recoverable amount is, here is the words, the amount recoverable ascertained to be only 1.58 crores. It means it is the recoverable amount of the machinery as on sorry as on 31st March 23. So this is the carrying amount of the machinery as on 31st March 23. Now I need to find out the, because has given the information regarding the recoverable amount for calculation of the impairment loss. How to calculate the impairment loss? Carrying amount minus which carrying amount? Closing carrying amount after depreciation before impairment loss as on 31st March 23. It should be compared with the recoverable amount. And only we got the impairment loss. Let's see what is the recoverable amount of the asset as on 31st March 23. But I have only carrying amount as on 1st April 21. So, but I need the carrying value on 1st April or 31st March 23 or 1st April 23. Let's see. So I need to provide 2-year depreciation. So 10.20. Anyhow residual value is 0. So I already provided depreciation for 4 years. Total 7. Out of 7, I provided depreciation for 4 years. Then what is the remaining expected useful life? 3 years. And 10.20 divided by 3 into 2. So if you did 10.20 divided by 3, you can get the depreciation per annum. But I need to provide depreciation for 2 years. So into 2, then I got the 6.80 crores. Then what is the closing carrying amount as on 31st March 23 before impairment? But after depreciation, 10.20 minus 6.80, then I got the 3.40. And I should provide that the impairment loss. What is the impairment loss formula? Recoverable amount minus, carrying amount minus recoverable amount. Carrying amount minus recoverable amount, and we got the impairment loss. So closing carrying amount before impairment minus impairment loss, then you got the closing carrying amount after impairment 1.58 crores. 1.58 crores. Then what is the further information? The company had followed the policy of writing down the revaluation surplus by the increased charge of the depreciation resulting from the revaluation. So you are required to calculate the impairment loss of the mission, and so this loss to be treated in the books of covalent. So this OCA balance is there, right? As on 1/4/21, there is two options with regarding to the treatment of the OCA balance. There are two options. The first option is the entire OCA balance should be transferred to P&L at the end of the useful life or at the time of the disposal of the asset. Second option, this OCA balance should be transferred to P&L every year on the basis of the in the ratio of the depreciation. Okay. So the OCA balance every year should be transferred to P&L over the period of the time. So that is the option 2. here they followed the policy of writing down the revaluation surplus. Writing down means reducing the revaluation surplus by transferring it to the P&L, okay, based on the charge of the depreciation. So in the ratio of the depreciation, simply saying. Let's see what is the OCA balance. So it was created on 1/4/21. So on 1/4/21 opening 4.20. So what I'm going to do, every year company, so not me, okay, every year company transferring the impairment, sorry, OCA balance to the P&L in the ratio of the depreciation. So for depreciation, I'm using here 3 years, right? So for calculation of for transferring of OCA balance also, you can use 3 years. So 4.20 divided by 3, then I got the 1.4 crores. That is the, this amount should be transferred to P&L from OCA balance. Then what closing OCA balance? 2.8 crores. Then 22-23, 2.8, it is the opening balance. Then next year also I should be transferred 1.4 crores to P&L. So 2.8 divided by 2. Then coming to 22-23. What is the total impairment loss here? 1.8. So previously there is a OCA balance. There is a OCA. So let's see what is the OCA balance as on 31st March 23. So the OCA balance as on 31st March 23, 1.4 crores. Then what is the rule? The impairment loss generally is transferred to P&L. If at all any OCA balance is there, any revaluation gain is there with respect to this asset previously, this impairment loss should be set off against the OCA balance first. Then the remaining should be transferred to P&L. What is the OCA balance? The OCA balance is 1.4 crores as on 31st March 2023. So impairment loss of 1.82 crores should be set off against 1.4 crores. This is the OCA balance. The remaining balance should be set off against P&L 0.42. So this is the balancing figure. Okay. So the impairment loss should be debited to P&L 0.42. So 0.42. Okay. You got it? So let's see the problem of so we have completed question number 6. What is the question number 5? 1 minute. So we just completed the question number 2, I think. Yesterday we have completed question number 2. So let's see question number 3. So Earth Infra Limited has 2 CGUs A and B. So we have covered, I have discussed all the different types of problems. Just these remaining problems are the repeating one. Let's look at the remaining problems also. Earth Infra Limited has 2 CGUs A and B, and there is no goodwill within the carrying values. The carrying values of CGUA 20 million and 30 million. So the company has an office building in which it is using office headquarters and has not been included in above values. So CGU A 20 and B 30 before allocation of this office building. Office building means corporate assets. So what is the office building carrying value? 10 million. Then what is the recoverable amount of What is the recoverable amount? Based on value in use. So the recoverable amount is fair value less cost to sell or value in use, whichever is higher. If at all fair value information is not given in the question, I can assume that the recoverable amount equal to value in use. But I cannot assume that without having value in use, I cannot assume that recoverable amount equal to fair value. I cannot do that, okay. It means the synopsis of the conversation is the value in use is compulsory for recoverable amount. Then what is the recoverable amount of CGUA 18, CGUB 38? Determine the carrying values of CGUA and B are impaired. So after the impairment, after the providing of the impairment, what is the carrying values of CGUA and B? So here what are the carrying amounts? 20 million and as well as 30 million for B. So it is A and it is B. Okay, 20 and 30. So what is the, so I need to allocate the office building. What is the office building value? 10 million. 10 million should be allocated to CGUA and CGUB in 2:3 ratio. In 2:3 ratio. 10 divided by 5 into 2, 4, 3, 6. So what is the carrying amount after allocation? Carrying amount of CGUA and B after allocation of administrative building. So 36 million after allocation. Then what is the, these are the carrying amount after allocation. So I need to compare with the recoverable amount. What is the recoverable amount of A? 18 million and B 38 million. So for A 18 million. Then what is the impairment loss? 24 minus 18 equal to 6 million. And what about here? There is no impairment loss. And this 6 million should be allocated between this impairment loss of 6 million should be allocated to CGUA and as well as office building. In which ratio? In their carrying amounts ratio. What is the carrying amounts included in 24? 20 plus 4. So 20 is to 4. 20 is to 4. Okay, then 6 divided by 24 into 20. So it is 5 into 4. It is 1. The impairment loss of CGUA 5. The impairment loss for office building 1. So I need the carrying amounts after giving the effect of the impairment loss. So the carrying amounts of so I got the impairment loss of 6. So let's see what are the carrying amounts after impairment loss. So the carrying amounts after impairment loss A, B and office building. So carrying amount before allocation. Before allocation it is 20 and it is 30 and as well as for office building it is, or the carrying value it is 10. Now what is the impairment loss I have provided? So with respect to A it is 5 and with respect to B there is no impairment. With respect to office building it is 1. So carrying amount after allocation 15, 39. Okay, these are the carrying amounts after allocation of after giving effect of impairment loss. So this one easy problem only. One minute. Mhm. So the question number 3 is completed. Let's see the question number 4. So an entity has a machinery on 1417 with a carrying amount of 28 lakhs after depreciation of annual depreciation of 3 lakh with the remaining useful life of 9 years and the residual value 1 lakh. What is the annual depreciation? 3 lakh. And the depreciation is charged on SLM basis. So in 31st March 2018, the machine is revalued at 29 lakh rupees. The machine is revalued at 29 lakh rupees. So on 31st March 2020, the machine has fair value less cost to sell 20 lakhs and as well as value in use 21 lakh. Then show the transaction, show how the transactions would be reflected in the financial statements of entity 31st March 18, 31st March 19, 20 and as well as 21. So I need to find out the values. So what I am going to do? So opening carrying amount is 28 lakhs. Now what is the depreciation for 1718? So they already given 3 lakhs is the annual depreciation. So this is the carrying amount. So this is opening carrying amount as on 1/4/2018. So actually it is a closing carrying amount as on 31st March 18. Then it becomes the opening for the next year. And what happened in the next year? In 31st March 2018, the machine is revalued at 29 lakh. So what date they have used on 31st March 2018? Even though they have mentioned the 31st March 2018, so it doesn't it doesn't mean that it has to be included in the year 1718 because the revaluation always provided at the beginning of the year. If it is 31st March 2018, I can take it as a 1/4/2018 means. So I should provide the revaluation effect as on 1/4/2018. What is the opening carrying amount before the revaluation effect? 28 lakhs. And what is the revaluation profit? The fair value minus carrying amount. Then I got the revaluation profit. This should be added to the opening carrying amount. Then I got the carrying amount. Then I got the carrying amount as on 31st March. Sorry. Yeah. And you got the carrying amount as on 31st March 2018. It means you can write it as 1/4/2018. So carrying amount on 1/4/2018, then it becomes 29 lakhs. Then we should do the depreciation for 1920. Depreciation for 1920. 29 lakhs minus residual value 1 lakh rupees. So we got this 1 lakh rupees here. Sir, how you are calculating? What is the residual value? 1 lakh rupees. So for the calculation of the depreciation under straight line method, what is the formula? Opening carrying amount after the revaluation. So this is opening carrying amount after revaluation minus depreciation. So how to calculate the depreciation? Opening carrying amount minus residual value divided by remaining useful life. What is the useful life initially? It is 9 years. So it is 9 years. So 29 lakh minus 1 lakh divided by 8. So what is the remaining useful life on 1/4/2017? It is remaining useful life is 9 years. Then I should use the word 8. Then I got the carrying amount as on 31st March 2019, 25 lakh 50,000. So and after that I need to provide for the depreciation 2021 because it is 1/4/2020 value. So what is the depreciation? Again I should 25 lakh 50,000 minus 1 lakh rupees. We can put it as a 7. 25 lakh 50,000 minus 1 lakh divided by 7. Then you got again 3 lakh 50. Then I got the closing carrying amount as on 31st March 2021. Closing carrying amount as on 31st March 21. I got the 22 lakhs value. Then as on 31st March, sorry, so it is 1/4/2019. So it is 1/4/2019 and the depreciation for 2019 and 2020. So depreciation for 2019 and 2020. So this is the closing carrying amount as on 31st March 20. What is the value? 22 lakh. Then on 31st March 2020, it has given the recoverable amount. So fair value less cost to sell is 20 lakhs and value in is 21 lakhs. What is the recoverable amount? Recoverable amount is higher of fair value less cost to sell or value in use. So in this case, what is the recoverable amount? 21 lakhs as on which date? As on 31st March 2020. So this is the carrying amount. So this is the carrying amount and this is the recoverable amount. Recoverable amount 21 lakh. What is the impairment loss? 22 minus 21, then it becomes 1 lakh. So what is the carrying amount as on 31st March 2020 after impairment? So after impairment, it becomes 21 lakh. Then again I should provide the depreciation for 2021, 21 lakh minus 1 lakh divided by 6. So here they use the 8, here 7, here 6. Okay. What is the useful life actually? So the useful life is 9 years. So for the depreciation actually, the useful life is 9 years. So I have already provided depreciation for 1 year here. Then the remaining useful life is 8. Then again it becomes 7. Then it becomes it is 6. Okay. Then I got the carrying amount as on 31st March 21, 17 lakh 66,667. So what is the OCA balance here? What is the revaluation gain? The revaluation gain is 4 lakh as on 1/4/2018. So here 1/4/2018. What is the revaluation gain? 4 lakh rupees. Then it should be transferred to retained earnings 50,000 divided by and again 1920 50,000. So what is the balance as on 31st March 20? 3 lakh. So on 31st March 20, there is an impairment loss of 1 lakh rupees. So this impairment loss should be set off against the balance in OCA. What is the balance in OCA? 3 lakhs. So set off against the impairment loss 1 lakh. What is the balance? 2 lakh rupees in OCA. This should be transferred to P&L again 33,000. You know how it is been transferring to P&L. So 4 lakh divided by. So for 1819 depreciation, how many years are used? For 1819 depreciation, they used for 1819 depreciation they have used 8. So this is 1819 depreciation. Okay, so this is 1819 depreciation, they use the 8 years. So divided by 8, 4 divided by 8, it is 50,000. 4 lakh divided by 8 equal to 50,000. So in the same way for 1920 depreciation, what is the 1920 depreciation? The 1920 depreciation, okay, the 1920 depreciation, what is the value? It is 6. What is the word you have used? 6. So you can use the word 6. So 2 lakh divided by, because it should be transferred to P&L during 2021. For 2021, so what is the remaining useful life? 6 years. So that's why this 2 lakh should be transferred to P&L over the period of 6 years. 2 lakh divided by 6, 33.33. Then I got the closing carrying amount as on 31st March 21, 1,66,667. Question number 4 is completed. Then let's see question number 5. Question number 5, there are two CGUs, CGUP and CGUQ. What are the carrying amounts? 3,000 and 1,000 respectively. The company has an administrative billing 1,200 lakhs and R&D 900 lakhs. And administrative billing can be allocated. This administrative billing can be allocated between, administrative billing can be allocated, but R&D center cannot be allocated to CG. It means administrative billing is a allocable corporate asset, R&D is a non-allocable corporate asset. And due to the spread of coronavirus, impairment tests have been done on 31st March 20. So the remaining useful life of P is 10 years and Q is 5 years. And the fair value is not realizable. It means we are unable to find out the fair value. Then what is the recoverable amount in this case? The recoverable amount equal to value in use. What is the value in use? Present value of the future cash flows of the asset. What are the future cash flows of the CGUP? Asset P 600, useful life 5 years. Up to 5 years it is 600. Remaining 5 years it is 300. So what is the total useful life of the P? 10 years. Out of 10 years, 5 years is 600 lakhs. The remaining 5 years is 300 lakhs. Then for Q, it is 350 lakhs for 5 years. And the future expected cash flows from XYZ Limited as a whole is 950 lakhs 5 years. For the remaining 5 years, it is 400 lakhs. So what is the total useful life? Mean for how many years we will expect cash flows from the total organization XYZ Limited? 10 years. So out of 10 years, up to 5 years, XYZ Limited is generating 950 lakhs. For the remaining 5 years, it is generating only 400 lakhs. What is the discount rate? 12%. Okay. So let's solve this problem first. So what are the steps here? Carrying amounts of the CGU, P and Q. 3,000 and 1,000 respectively. After that, I should allocate the corporate asset, administrative building 1,200 lakhs. In which ratio? So wait. Question number 5. What are the carrying amounts before allocation? Corporate asset P and Q. Sorry, CGU, P and CGU, Q. What are the values? 3,000 and 1,000. So 3,000 lakhs and 1,000 lakhs. So I should allocate the admin building. So before going to that, useful lives are given because it has different useful life. Then so the carrying amounts of the allocation proportion of the office building should be based on the carrying amount into useful life. What are the useful life of P? The remaining useful life of P 10 and Q 5. So P 5, sorry, P 10 and Q 5. So P 10 and Q 5. And what I need to got? So what is the proportion for allocation of corporate asset? What is the proportion here? 30,000 and it is 5,000. I can write it as a 6:1. Then, so I should allocate the admin building. What is the carrying amount of administrative building? So what is the carrying amount of administrative building? So the company has an administrative building of 1200 lakhs. This 1200 lakhs should be allocated to P and Q in the ratio of 6:1. In the ratio of 6:1. So 1200 divided by 7 into 6. 1028. Then so 1200 divided by 7 into 1. So 171 lakhs. But usually, so this is the exact values. But here what happened is they are giving allocated head office administrative building 1000 as well as 200. Okay. He has given in the which ratio? He has taken the rounded off figures. But what is the actual amount? It is 1028 and it is 171 lakhs. But this is, you should remember it. Of course, if you are doing like this also correct. But in answer itself, they have taken the rounded off values. They have taken rounded off values. So that's why you just take 1 minute divided by 35,000 into 30,000. This 1000 lakhs should be, this 1000 lakhs should be allocated. So we can also take 1000. So instead of 1028, you can take it as 1000 because it is in answer itself they have taken as 1000 lakhs. Then coming to here, so actually it is 171 lakhs, but in answer they have taken the 200 lakhs. So if at all you can take 1028 also, that is not a problem, but in answer they are giving like this, right? Let's follow the answer. In exam you can write, if you remember really you can round it off it. If at all remember this point, you can take directly 108, 1028 and 171 and you can solve the answer. So what is the carrying amounts after allocation? What is the carrying amount after allocation? So 3000 after allocation it is 1000, then it becomes 4000 lakhs. Here it becomes, sorry, please change it. It is 200 lakhs, right? So then it becomes a 1200 lakhs carrying amount after allocation. And what is the recoverable amounts of P? What is the recoverable amount of P? The recoverable amount means present value of the future cash flows. So up to 5 years it is 600 and the remaining 5 years it is 300. So what is the discount factor? So up to 1 to 5 it is 3.6048. Up to 6 to 10 years it is 2.0454. Then the recoverable amount of P is 2776.50. Okay. Then I got the recoverable amount. And what is the recoverable amount of Q? So what is the cash flows? The cash flows from Q is 350 for 5 years. So 350 into 3.6048. Then I got the 1261.68. These are the recoverable amount of P. This is the recoverable amount of Q. What is the total recoverable amount of entire XYZ Limited? For entire XYZ Limited is expecting 950 lakhs for 5 years. For the remaining 5 years, we are expecting 400. Then what is the recoverable amount of XYZ Limited? 4242.72. So these are the total recoverable amount of entire XYZ Limited, but it is not required currently. I want the recoverable amount of P and Q. So 2776.50 minute 2776.40 and 126 point. What is the recoverable amounts? 4000. What is the total carrying amount? 4000 plus 1200. So here 4000 plus 1200. This should be compared with the recoverable amount. Then I got the impairment loss. Impairment loss equal to carrying amount minus recoverable amount. So I got the I should provide the impairment loss only for P. And this impairment loss should be allocated between P and head office building in which ratio? In 3:1 ratio. So now 1223.50 divided by 4 into 3. What is the value? 917. What is the value? 917.625. How you got this value? 1223.50 divided by 4 into 3. Here also 1223.50 divided by 4 into 1. 1223.50 divided by 4. Then we got the 305.875. 305.875. So what is the, now I wanted to find out the revised carrying amount. Administrative billing 1200 minus 305.875. After impairment loss, it becomes 894.125. After impairment loss, P becomes 3000. Actually, originally it is 3000. The impairment loss is 917.625. Then it becomes 2082.375. And what is the carrying amount of Q? Q means here, sorry, the carrying amount of Q is 1000 lakhs only because there is no impairment loss. Then I need to find out the what is the carrying amount of non-allocable corporate asset R&D center 900. So this 900 also should be included to the total carrying amount. So what is the total carrying amount of CGP, Q, administrative billing? It is a allocable corporate asset, non-allocable corporate asset R&D. So it is 2082.375 for P, and Q it is 1000. For administrative billing it is 894.125, and for R&D it is 900. So what is the total carrying amount of entire XYZ Limited? Carrying amount of XYZ Limited. What is the recoverable amount of XYZ Limited? 4242.72. We already calculated here. 4242.72. And what is the total impairment loss of the entire organization? Impairment loss is carrying amount minus a recoverable amount. So this is an impairment loss. Impairment loss should be allocated between, it should be allocated to all the assets. So PQ, okay, P, Q, and admin billing as well as R&D billing in respective carrying amounts ratio. These are the respective carrying amounts which have been included. then 633.78. So this is the total impairment loss divided by total carrying amount. So sorry, divided by total carrying amount 4876.50 into. So this is the impairment loss for P. Okay. And this is the impairment loss for Q. This is the impairment loss for admin building. This is the impairment loss for R&D. So what are the final carrying amounts? So for A, it is 2082 minus impairment loss of 270.64. And for B, originally it is 1000. After the impairment loss, 129.96. Then I got the 870.04. And what is the administrative building carrying amount after impairment loss? Okay, after step 2 impairment loss, opening is 894.125. Sorry, 894.125 minus impairment loss 116.34. So 116.34, the impairment loss of administrative building. For R&D 900 minus impairment loss of 116.96, then you got the 783.04. In the previous problem, there is no impairment loss if you are looking at the whole organization. That's why there is no further allocation. That's why there is no much complication. But here there is an impairment loss if you're looking at the whole organization, and that entire impairment loss should be allocated to all the assets which are included in the carrying amount for the calculation of the impairment loss. Okay. So what is the step 1? Calculation of the impairment loss for the CGU, and after that, after allocation of the corporate allocable corporate asset. After that, I need to find out the impairment loss for the entire organization. That impairment loss should be allocated to all the assets. So in this problem, what is the important element? The element we should remember is here they have taken 1000 and as well as 200 lakhs instead of 1028 and 171. Okay, that is an important element. Let's see what is the next problem. So question number 7 is completed. Now question number 8. Question number 8. Okay. Let's see the question number 8. So, Elia Limited is a manufacturing company which deals with the manufacturing of the cold drinks and beverages. This is the nature of business. And it is having various plants in India. The machinery as in the machinery A in the Baroda plant, which is used for the purpose of bottling. And there is one more machinery B, which is it is clubbed with the machinery A. And machinery A can individually have an output and also sold independently in the open market. But the machinery B cannot be sold in the isolation and without clubbing with the machinery A, so it cannot produce output as well. Here we can able to find out the value in use for machinery A. I am unable to find out the value in use for machinery B. In that case, what I am going to do, I should created one CGU. In that CGU, so machinery A and machinery B is there, but for machinery A individually I can able to find out the impairment loss, but for the purpose of providing the impairment loss for for the machinery B, so I have created CGU, and this CGU I have included machinery A and machinery B. Then company considers this group of assets as cash generating unit and an inventory amounting to 2 lakhs and goodwill amounting to 1.5 lakhs included in the CGU. So in our CGU, so I have grouped few assets A, B, inventory, and as well as goodwill. This is our CGU. Okay. And machinery A was purchased on 1st April 2023 for 10 lakhs and residual value is 50,000. So for machinery A is purchased on 1st April 23 for 10 lakhs, residual value 50. And what is the machinery B? Machinery B is purchased on 2005. So after 2 years of the purchase of machinery A, machinery B is purchased. What is the useful life? The useful lives of both machinery A and B is 10 years and machinery B is purchased for 5 years and no residual value. Then the company expects following cash flows in the next 5 years pertaining to the machinery A. So these are the cash flows. Okay. Now what happened? On 31st March 2008, the professional valuers estimated that the current market value of the machinery A is 7 lakh. The valuation fee is 1 lakh. So what is the fair value here? The fair value of the machinery A as on 31st March 2008 was 7 lakhs. The valuation fee is 1 lakh. Here the doubt is regarding with can I take valuation fee as cost to sell? Can I take valuation fee as a cost to sell? No, we will not take valuation fee as a cost of sell. That is the special point here. Then there is a need to dismantle the machinery before delivering it to the buyer. The dismantling cost is 1.5 lakhs. The specialized packaging cost would be 25,000 and legal fee would be 75,000. Whether these costs are included in the cost of sell? Yes, because these are necessary for selling the machinery. Okay. So 1.5 lakhs, 25,000 as well as 75,000 should be included in the cost to sell. So what is the fair value actually? The fair value is 7 lakhs minus what is the cost to sell? Talking about the machinery A. What is the cost to sell? So dismantling cost 1.5 lakhs, 1 lakh 50 plus specialized packing cost 25,000 as well as legal fee 75,000. So total 2.5 lakhs. What is the fair value? 7 lakhs minus cost to sell 2.5. 7 minus 2.5 equal to 4.5 lakhs. So this is the fair value less cost to sell. But I need value in use, right? So let's see what is the value in use for CGU. Sorry, CGU. So what is the value in use of machinery A? So here they are giving the information. These are the cash flows for future years. So with this information I can able to find out the with this info you can able to find out the value in use for the machinery A. So what is the value in use for machinery A? So on 31st March 2008, so the recoverable amount is finding out as on 489,650. How this recoverable amount of machinery A? Value in use, so fair value as cost to sell or value in use, whichever is higher. How to find out the fair value as cost to sell? 4,50,000 we already calculated it. So 4.5 lakhs. Then what is the value in use? Value in use is information is given in the question. So 1.5, 1 lakh, 1 lakh, 1.5 lakh, 1 lakh rupees excluding residual value. What is the residual value for machinery A? The machinery A residual value is 50,000. So this 50,000 also should be included at the end of the 5th year. So let's see what is the calculation. So 1.5, 1 lakh, 1 lakh, 1.5, 5th year 1 lakh. Apart from that 1 lakh, we should expect the residual value of 50,000. So we take the present value of the factor and I got the discounted cash flows. So present value of the future cash flows 489,650. So present value of future cash flows 489,650. Value in use is 489,650 and fair value less cost 4,50,000. Whichever is higher. 489,650 is the recoverable amount. So here we should ignore the valuation fee. Valuation fee should not form part of cost to sell. Then what is the carrying amount? So I found out the recoverable amount as on 31st March 2008. Now what is the carrying amount of the machinery A as on 31st March 2008? So I need to find out the carrying amount of machinery A. So let's see how to calculate the carrying amount of the machinery A. Five lakh 25,000. 5,25,000. So this 1 minute. It is question number. Tell me the question number, please, first. Question number 8. So this is question number 8. Okay. How to calculate the carrying amount? Machinery A. The carrying amount of the machinery A is 10 lakh rupees. And residual value is 50,000. Useful life is 10 years. So which has been purchased on 1st April 2003. So 1st April 2003. Purchased on 1st April 2003. Now I want the carrying amount of the asset as on 31st March 2008. So 5 years has been expired. So I should provide the depreciation for 5 years. So what is the depreciation per annum formula? So 10 lakh minus 50,000 divided by 10 years equal to 95,000. So 95,000 is the yearly depreciation. So I need the total depreciation for 5 years. 95,000 into 5. So it is 4,75,000. What is the total depreciation? 4,75,000. So what is the total cost? 10 lakh minus what is the total depreciation? 4,75,000. And what is the carrying amount after providing of the depreciation? It is 5,25,000. So what is the carrying amount of the machinery A as on 31st March 2008? 5,25,000. These are the carrying amount. Then after that, what is the carrying amount of machinery B? But I don't know the individual carrying amount of machinery B. So sorry, I don't know the individual value in use of machinery B, but I can able to find out the carrying amount of the machinery B. So let's see. This is the carrying amount of the machinery B. What is the cost? 5 lakh rupees. This has been purchased on 1/4/2005. So I should provide the depreciation for 3 years for finding out the machinery value as on 31st March 8. So let's find out the depreciation per annum. So let's find out the depreciation per annum. 5 lakh rupees. What is the residual value? The machinery B residual value is 0. The machinery B residual value is 0. With no residual value. The machinery B with no residual value. Okay. Machinery B with no residual value. Okay. 5 lakh minus 0 divided by 10 years equal to 50,000. This is the depreciation per annum. So I need to provide the depreciation for 3 years. So depreciation for 3 years equal to 50,000 into 3. 1,50,000. This is the depreciation for 3 years. Then what is the carrying amount of machinery B? What is the carrying amount of the machinery B equal to 5 lakh minus depreciation for 3 years 1 lakh 50, then I got the 3 lakh 50. So this is the carrying amount as on 31st March 2008, 2 lakh 50. What is the inventory carrying amount? It has been given in the question. So the inventory has been valued in accordance with the Ind AS 2. So we should not provide the impairment loss on this inventory, because we should provide the impairment loss only on the assets which are applicable in days 36. But this inventory should be included in the CGU for the purpose of calculation of the impairment loss, or for the entire CG, for the entire CGU. What is the recoverable value of CGU? 10 lakhs. What is the recoverable value of CGU? 10 lakhs. What is the inventory value? What is the carrying amount of the inventory? The carrying amount of the inventory 2 lakh and goodwill 1.5 lakh. 2 lakh, 1.5 lakh, and I have the total recoverable amount of the CGU 10 lakh. So what is the total impairment loss? 2 lakh 25. 2 lakh 25,000. This 2 lakh 25,000 is there. So I can able to find out the impairment loss of the machinery A individually, because I can able to find out the impairment loss of, so I can able to find out the recoverable amount of machinery A. What is the impairment loss for the machinery A? 525 minus 489 650, 35,350. So what is the total impairment loss? 225. Out of 225, we can directly say that 35,350 is allocated to machinery E. What is the remaining balance? So out of 2,25,000, so total 2,25,000. So 2,25,000 should be allocated to the goodwill first. What is the goodwill value? 1,50,000. So goodwill is completed. Then what is the balance amount? 75,000. This 75,000 should be, out of this 75,000, I can easily find out that 35,350 is the machinery. So directly write down the 35,350 and the remaining balance machinery B. But generally, if at all I am unable to find out the recoverable amount of machinery A also, then the allocation of this remaining balance should be in the ratio of their carrying amounts. Here you no need to allocate 75,000 in the respective carrying amounts. Then let's find out the carrying amounts after impairment as on 31st March 2008. So machinery A 525, B 350, and this is carrying values before impairments. Carrying amounts before impairment. And what is our values? These are called impairment loss. So what is the impairment loss for machinery A? 35,350. Machinery B 39,650. Inventory, we are not supposed to provide the impairment loss on inventory. So that's why here the balance of 75,000 while providing the impairment loss of 75,000, I have excluded inventory. Okay. So what is the India's 36 applicable assets? Machinery A and machinery B. Out of these two, already we have the machinery A impairment loss. So the remaining balance should be allocated to machinery B. Hmm. Then we got the impairment loss, sorry, carrying amounts after the impairment. So then it becomes the opening values 489,650, 3,10,350, and as well as inventory 2 lakh rupees. Goodwill is completely arranged out. So I need to provide the depreciation. So let's see what is the next elements. So in the next year, the company has done the assessment of recoverability of the CGU and found that value of such CGU is 11 lakhs as on 31st March 2009. And the recoverable amount of machinery A is 4 lakh 50 and the combined machine of A and B is 7 lakh 60. These are the recoverable amounts as on 31st March 2009. So let's find out the closing carrying amounts as on 31st March 2019. Then it should be compared with the recoverable amounts. So 31st 3 2019. So depreciation. So I should provide the depreciation for the machinery A, right? So 87 930. So 489 650 divided by minus what is the residual value? What is the residual value for machinery A? It is 50,000. So minus 50,000 divided by, already you have provided the depreciation for 5 years. So I should provide the depreciation for remaining 5 years. So 87 930. So for machinery B also I should provide the depreciation for annum. Then I got the closing carrying amount after the depreciation. For the inventory we know we are not supposed to provide the depreciation. So 2 lakh rupees. This is the carrying amount of CGU as on 31st March 2019. Then what is the recoverable amount? The recoverable amount is 11 lakh rupees. So this is a case of reversal of impairment loss. Reversal of impairment loss. So generally we are not discussing the element of reversal of impairment loss so far. So I will give you the steps. So you just follow those steps. Need to give the reversal of the impairment loss. If it is a impairment loss, the formula is carrying amount minus recoverable amount. If it is a reversal of impairment loss, you are not supposed to do that recoverable amount minus carrying amount. Okay, I will give you the steps. So what is the carrying amount? 867 734 before the reversal of the impairment loss. Assume that it is 1, equation 1. Then what is the recoverable amount of machinery A? Then it is 4,50,000. It has been given directly. So 4,50,000 is the machinery A. The recoverable amount of machinery A and B is 7,60,000. And the value of the total CGU is 11 lakhs. Value of the total CGU, recoverable amount 11 lakhs. Okay. Then what is the reversal of impairment loss? Reversal of impairment loss equal to lower of A and B. Lower of A and B. What is A? A means recoverable amount minus 1. What is the recoverable amount? 11 lakh rupees minus 1. For the equation 1, this is the carrying amount. Equation 1. Then I got 232, 266. Then closing carrying amount as if no impairment. So I need to find out the closing carrying amount of the machinery A. I need to find out the closing carrying amount of machinery A and B as if no impairment. If it is no impairment, so 5,25,000 and 3,50,000 minus depreciation 95,000, 50,000. So this is the 31st March 2018 values 525, 350. So I just provided the depreciation. So I provided the impairment loss in 8 9. Provided the impairment loss in 7 8. So I should ignore that impairment loss. If I ignore that impairment loss, what is the carrying amount of the machinery A and B? Without impairment, only adjustment is depreciation. So 9,30,000 rupees. This 9,30,000 minus what is the equation 1 carrying amount, then you got this value. So I got A and B. What is the reversal of impairment loss? Lower of 232 266 and 62 266 622 666. Then you got the reversal of impairment loss 622 666. This is reversal of impairment loss. It means it should be included to the carrying amount. Then what is the closing carrying amount before the reversal of impairment loss? 867 734 plus reversal of impairment loss 622 666. Then I got the closing carrying amount of the CGU after impairment loss, that is 9,30,000. Okay. So what is the carrying amounts? Carrying value You can provide it up to here. Okay. So there is a reversal of impairment loss. After that, what is the thing they have given in the question? So what is the recoverable amount of A and B? What is the recoverable amount of A and B? 7 lakh 60. What is the recoverable amount of machinery A? 4 lakh 50. So what is the recoverable amount of machinery B in this case? 3 lakh 10. Because for the total it is 7 lakh 60. For A it has given 4 lakh 50. Then B it is 3 lakh 10. So these are the recoverable amounts. Then what is the carrying amounts? Carrying amounts with impairment 401,720. So with impairment 401,720. And what is B? 266,014. 266,014. So if you are doing that, so 401,720 minus recoverable amount. So 28,280 plus 33 986 total 622,266. Means this reverse of impairment loss should be allocated between A and B in this ratio. So how to calculate this ratio? So carrying amount, carrying value without giving the effect of reversal of impairment loss. So 401,720, 266, 614. This should be compared with the recoverable amounts. I can able to get the individual reversal of impairment losses. What is the total impairment if reversal of impairment loss? 62266. So okay, here this problem covers the reversal of impairment loss and allocation of the impairment loss also. So please take a break. flow. Okay, the break is completed. Let's see the other problems. So question number 9. Bcca Limited is a company which has performed well in the past. The assets, an item of equipment suffered a significant and unexpected to use the machine for further 4 years to a reduced level. And the equipment will be scrapped after 4 years. The financial accountants for PQR Limited has produced a set of cash flow projections for the equipment for the next 4 years. So ranging from optimistic to pessimistic. The CFO thought that the projections were too conservative and he intended to use the highest figures for each year. So now all the discussion is about the expected future cash flows of the equipment. So how to find out the accountant as giving the cash flows, but the CEO projections are final, so we need to take the CEO projections. These are the CEO projections of the cash flows in the future. So how many years? 1, 2, 3, 4. What is expected useful life? Remaining expected useful life of equipment is 4 years. So I need to find out the present value of the future cash flows. So the above cash flows are to be assumed to be occur on the last day of the each financial year. Last day of the each financial year means 31st March 2017, 18, 19, 20. Then what is the pre-discount rate? Pre-tax discount rate is 9%. So this discount rate should be used for the discounting of the future cash flows. A machine could be sold as on 31st March 2006 for 6 lakh and related selling expenses in this record could have been 96,000. So what is the fair value? 6 lakh rupees. What is the cost to sell? What is the cost to sell? 96,000. So 6 lakh minus 96,000 equal to 5 lakh 4,000. This is fair value less cost to sell. Then as on 31st March 2006. And what is the value in use? Value in use is present value of the cash flows. 588,230. And what is the fair value less cost sell? 504,400. Whichever is higher is the recoverable amount. And the recoverable amount is 4,88,230. Then I need to find out the impairment loss. Carrying amount minus impairment loss. How to find out the carrying amount? So the carrying value of the asset as on 31st March 2006 is given. So 6,60,000 minus 588,230, then we got the impairment loss. So after that, the Indian government has indicated that it may compensate the company for any loss in the value of the asset up to its recoverable amount and calculate the impairment loss and also revise the depreciation of the asset. So revised depreciation of the asset. So I got the impairment loss 71,760. And what is the revised carrying amount? 6,60,000 minus impairment loss 588,230. So I need to find out the revised depreciation. 588,230 minus 0 divided by remaining expected useful life 4 years. The remaining expected life how much? 4 years. So then I got the 147,058 per annum. So what happened? So an amount of 36,000 was held in revaluation surplus in respect of the asset. So there is OCA balance with respect to asset that is 36,000. And what is the impairment loss? 71,770. So this impairment loss 770,000 should be set off against the revaluation surplus first. And the remaining balance, what is the remaining balance? 71,770 minus 36,000 equal to 35,770 should be charged against P&L. Okay, then what about the treatment of the government compensation? Any compensation given by the government would be accounted as it becomes receivable. Only it should be accounted. Accounted means it should be reduced from the cost of the asset. But here there is no such certainty regarding the receipt of government grant, because use the word it may compensate. So there is no certainty. It depends on the will of the government. It may compensate. That's why this compensation should not be taken into consideration. Now after that, question number 10. So on 1st January year 1, the entity Q purchased the machinery costing 2,40,000 with an estimated useful life of 20 years and residual value 0. Residual value 0, and the depreciation is computed on straight line basis. So the asset had been revalued on 1st January year 3 2,50,000 with no charge in the useful life at that rate. On 1st January year 4, an impairment review should be showed the machinery's recoverable amount to 1 lakh rupees and its estimated remaining useful life to be 10 years. And the carrying amount of the machine on 31st December year 2 and the revaluation surplus on 1st January year 3. So what is the carrying amount of the machinery on 31st December year 3 immediately before the impairment? And what is the impairment loss and what is the depreciation? This is the question. So what is the opening carrying amount? 2,40,000. And what is the depreciation formula? So 2,40,000 divided by the 20 years. So I got the 2,40,000 divided by 20, 12,000. So now after that, so the asset had been revalued on 1st January year 3. 1st January year 3 means, so 2 years has been expired. Year 1, year 2. So I need to provide the depreciation for 2 years. Then I got the opening carrying amount before revaluation. So this is the opening carrying amount before revaluation. So I need to find out I need to give the effect of the revaluation surplus. The revaluation surplus is 35,000 because the revalued amount is 2,50,000. So 2,50,000 minus carrying amount 2,16,000. Then we got fair value gain. Then calculation of the impairment loss at the year 4. Calculation of the impairment loss at the end of the year 4. So when machinery is revalued on year 1, the depreciation is charged on the revalued amount. So what is the revised opening carrying amount? 2,40,000. So I should provide the depreciation in year 3. So already 2 years has been, 2 years depreciation is elapsed. So remaining 18 years. So 2,50,000 divided by 18, 13,889. Then I got the carrying amount, closing carrying amount at the end of the year 3, 236,111. And they are giving the information. On 1st January year 4, an impairment review and the recoverable amount is 1 lakh. So they are giving the information on 1st January. Usually I should find out the impairment loss only at the end of the year. If it is 1st January year 4 means it is 31st December year 3. What is the closing carrying amount on 31st December year 3? 236,111. But what is the recoverable amount? Recoverable amount is 1 lakh. So I should compare with the both. Then the impairment loss is carrying amount minus recoverable amount equal to impairment loss. 136,111. This is the impairment loss. So an impairment loss of 34,000 will be taken to other comprehensive income. For the impairment loss 136,111. So impairment loss generally should be transferred to P&L, but there is an revalued amount. What is the revaluation gain? 34. So 136,111 impairment loss should be set off against OCA first, 34,000. What is the remaining balance? Remaining amount 101,111 should be recognized in statement of P&L. Then the closing carrying amount would be 1 lakh rupees. What is the depreciation for the remaining years? So already here, what is the remaining useful life? The remaining useful life is 10 years. This 1 lakh should be depreciated over 10 years. The depreciation is 10,000. What is the closing carrying amount after providing of depreciation at the end of year 4? Closing carrying value at the end of year 4. Closing carrying value at the end of the year 4 equal to 90,000. 1 lakh minus 10,000. Okay. So in days 36 is completed. After that, let's complete one small in days 23. Okay. Open in days 23. One minute. So let's open the chapter in days 23. Borrowing cost. The chapter name is borrowing cost. So the chapter name is borrowing cost. India 3 deals with the borrowing cost. What is meant by borrowing cost? What is meant by borrowing cost? The expenses incurred with respect to the borrowing of the funds. Whatever the expenses incurred with respect to the taking of the loan is called the borrowing cost. So note down the definition. Here. What is the borrowing cost? All the expenses which are incurred for the purpose of borrowing of funds are called borrowing cost. So all the expenses. Let's see what are the expenses. Interest with respect to the borrowing of funds. We should pay the interest every year, right? Then loan processing fee and prepayment charges. So all these are the expenses with respect to the taking of the loan. So this is called borrowing cost. So here the main element of the Index 23 is out of this borrowing cost, generally few parts should be capitalized to the cost of the asset and the other part should be added to the P&L. So the main objective of the Index 23 is which part of the borrowing cost should be capitalized and which part of the borrowing cost should be transferred to P&L. That is the main objective. So we don't understand what you are trying to say. I will let you know 1 minute. So I have taken a loan for 10 lakh rupees for the purchase of the car. So as per the PPE, so I have purchased a car for business for business purpose. Then this car should be classified under PPE. So if you remember, if you taken a loan for the acquisition of the PPE, uh, the interest amount generally should be transferred to P&L. But if the loan amount should be expended on the loan amount should be expended on the qualifying asset, then the interest with respect to that loan amount should be added to the cost of asset. That is the provision as per Ind AS 23. So you have purchased a car and you are paying interest 1 lakh rupees per annum. Whether this 1 lakh rupees per annum should be added to the cost of the asset? No. Because all the expenses incurred before the asset is ready for use should be added to the cost of the asset. So that is the rule as per the Ind AS 16. All the expenses incurred before the asset is ready for use. So all the expenses means it includes interest expenses also. Whether which type of interest expenses should be included to the cost of the PPE. That is the main element as per Ind AS 16. Here not use the word PPE, he used the word qualifying asset. Why? Because so as per Ind AS 23, so what is the definition here? As per Ind AS 23, interest expenses, the interest amount, or we can write it as a borrowing cost. We can write it as a borrowing cost which are incurred, borrowing cost which are incurred, or we can write it as borrowing cost in respect of loan. Okay, borrowing cost in respect of loan, the loan which is expended or which is spent, which is means here loan. The loan amount is expended or spent for acquisition of qualifying asset, then such respective borrowing cost should be transferred to cost of the asset. That is the main element. So here, so the borrowing cost is there. The borrowing cost should be capitalized to the cost of the asset provided if the borrowing is taken for the acquisition, construction or production of qualifying asset. If the borrowing is taken for the purpose of acquisition, construction or production of the qualifying asset, then the borrowing cost in respect of such borrowing should be capitalized to the cost of the asset. It means added to the cost of the asset. So let's see what is the qualifying asset. It is an asset that necessarily takes substantial period of time to get the asset ready, to get the asset ready for its intended use or sale. For the qualifying asset, it is an asset that necessarily takes substantial period of time to get the asset ready for its intended use or sale. That is the qualifying asset definition. So for example, I have shown you, right? So I have purchased a car. So we connect with this. Wait, first we will complete the concept. Then what is meant by qualifying asset? If an asset that necessarily takes substantial period of time. What is meant by substantial period of time? What is meant by substantial period of time? In case 23 does not provide evidence. Generally, circumstances and fact company should decide. But general sense, period of 12 months may be considered as a substantial period. If anything, it doesn't mean nothing is mentioned in the question, I can assume that uh, 12 months is the substantial period. If they mention specifically this is the substantial period, and we should take that period as a substantial period. So here exclude. So what are the assets that are excluded from the definition of qualifying asset? Even though it satisfies the definition of qualifying asset. Assets that are ready for its intended use or sale when acquired or not qualifying assets. Ready or intended use or intended to sell. Whenever I have acquired, for example, I acquired on today. I have purchased asset on today and I can use this asset in my business from the today itself. Then it is not called qualifying asset. So it should have some time after the acquisition and the date of acquisition and date of ready to use. That should have some time. It needs some time. For the construction of the machinery, I will take 6 months. It takes 6 months. So this 6 months period is called substantial period of time, provided it has been mentioned in the question. Otherwise, this 6 months period should not be considered as a substantial period of time. For example, for the construction of the one machinery, it will take almost 15 months. So I have taken a loan for this construction of the machinery. So I am incurring some expenditure or something. So I am I am using this loan amount on the construction of the machinery. So whether this machinery is a qualifying asset is not. Yes, this machinery is a qualifying asset because it is taking 15 months time for it's ready to use in my business. Then the interest amount that have been paid on that loan amount should be added to the cost of the asset until the asset is ready for use. And the inventories that are manufactured or otherwise produced in the large quantities on a repetitive basis because of difficulty in monitoring the borrowing cost until the inventory is sold and allocating it to the inventory. And the qualifying assets that are measured at fair value, biological asset in days 41, and financial assets. So all these are excluded from the definition of qualifying asset under Ind AS 23. So what are the exclusions? Repeat it with me. So assets which are ready for use on the date of purchase. Second, inventories. Third, inventories measured at fair value. And fourth one, financial assets. Then what is the substantial period of time? I already discussed now. The main element here is, the main aspect of the Ind AS 23 is which part of the borrowing cost should be capitalized and which part of the borrowing cost should be transferred to P&L. So the following borrowing cost should be capitalized. The loan amount should be utilized for the purpose of acquiring a construction of the qualifying asset. Generally, next. Giving which part of the borrowing cost should be capitalized, right? For this, I have divided the entire borrowings into two types: general borrowings and specific borrowing. General borrowings and specific borrowings. With respect to the general borrowings, how to calculate the capitalized interest. With respect to the specific borrowings, how to calculate the capitalized interest. Let's see. So for the capitalization of this borrowing cost, we have classified specific borrowings and general borrowings. Then what is the commencement date for the capitalization of the borrowing cost? What is the commencement date? What is the commencement date? Commencement of the capitalization. The entity shall capitalize the borrowing cost as a part of the cost of qualifying asset on the commencement date. The commencement date is loan taken or development activities on asset has started and expenses incurred on the asset. What is the commencement date? Loan taken or development activities on asset has started and expenses incurred on the asset. The commencement date is later of following three dates. So, but this is the formula for general borrowings. For the specific borrowings, for specific borrowings, we should ignore date of actual expenses incurred. Date of actual expenses incurred. Okay. So let's see the exact form. Okay, this is the commencement date. And when should we stop the capitalization of expenses? The capitalization of the borrowing cost should stop on the date when the asset is ready for its intended use or sale. So that is the stopping date. And when should we suspend the capitalization of the borrowing? Capitalization of the borrowing cost shall be suspended for the period in which what capitalization of the borrowing cost should not suspend when the temporary delay is necessary for the asset getting ready for its intended use or sale. So when should we temporarily stop the capitalization? When the active development is suspended. So that is the rule. But what is the exception to that rule? Even though the active development is suspended, the reason for that suspension is necessary for asset ready for its getting in use of sale. Then that suspended period borrowing cost should also be included to the cost. Suspended period borrowing cost. Suspended period. What is suspended period? In this period, the active development of the construction is not going on. So in that period, that period borrowing cost should not be added to the cost of the asset. That is the rule. What is the exception? Even though the activities are not going on, because the stopping of the activities is necessary for its asset ready for its intended use or sale, then that borrowing cost should be added to the cost of the asset. Extended period due to high water levels delay construction of the bridge. So I am constructing one bridge. Okay. So due to shortage of the labor, I stopped the construction of the bridge for 4 months. So this 4 months interest should be transferred to P&L and should not be added to the cost of the asset because there is a suspension of the activities. Then after that, I have stopped the construction of the bridge because there is a high water level. So this for four months. Again, it has been 4 months. But this 4 months interest should be added to the cost of the asset because this 4 months is stopped not because of other reasons. This whatever the time I have taken for the completion of the bridge is necessary because there is a high water levels right at that time I cannot construct the bridge. So that's why I have stopped the construction activities for some time. Even though this happens, this construction is delayed because of one purpose which you cannot avoid. Then that case, that interest cost should be added to the cost of this. This is the formulas. So how to calculate the interest? Let's see how to calculate the interest. Total loan amount into interest rate into period. So what is the interest? Total loan amount into interest rate into period. This is the interest. So how to calculate the capitalized interest calculation for general borrowings and specific borrowings? Because for the entire borrowings I had divided into two, general borrowings and specific borrowings. Let's see how to calculate the capitalized interest for the general borrowings. So expenditure incurred on the qualifying asset into interest rate into time period. For how much period I should take the uh, what is the period of the interest? And the period is beginning from which one? Later of 3 dates. The period is beginning from the later of 3 dates. What are the 3 dates? The 3 dates are loan taken date, activity starting date or construction starting date, and third date is expenditure incurred date. So with respect to the general borrowings, the period starts from the later of 3 dates. When it is going to be ending, date of ready to use. With respect to that period, that period interest should be added to the cost of the asset, and the remaining period interest should be transferred to P&L. Then with respect to specific borrowing, same formula. Expenditure incurred, interest rate into time period. But for the calculation of the time period, I should ignore the date of expenditure. What is the remaining two dates? Date of taking of loan, date of commencement of the activities. So I should take the date of latter of these two dates. For the general borrowings, latter of three dates. And the ending date is the same. If the asset is ready for use, from that date onwards, we should stop the capitalization of the interest. And for example, I am giving the dates. I have given one example. What is the date of taking of the loan? 1/4/21. So 1/4/21 is the date of taking of the loan. On that date, so we have taken a loan of 100 lakhs. So what is the construction starting date? I have started my construction activities on 31st March 2022. So after taking of the loan, I have sitting. So I'm just doing my activities, but I am not started any activities with respect to construction. I have taken a loan on 1/4/21, but I have started the construction activities on 1/4/22. It means 31st March 22. And after that, on 31st March, sorry, on 31st August 2022, I have incurred expenditures. So I have incurred expenditure out of this loan. So what is the date of expenditure? 31st/8/2022. Then after that, on 31st March 2023, the construction is completed. On 31st March 2023, the construction is completed. Okay. Then the loan is repaid on 31st March 24. Now, I have taken a loan on 1st April 21, but I have repaid the loan on 31st March 24. So I should pay the total interest of 3 years. So what is the total interest period? 3 years. Out of these 3 years, generally interest should be transferred to P&L. Can I transfer the entire 3 years interest to the P&L? No. Some part of the interest, some period part of the interest should be capitalized, remaining interest should be transferred to P&L. Let's see which part of the borrowing cost should be added to the cost of the asset. So the main objective of Ind AS 23 is which part of the borrowing cost should be added to, should be capitalized, and which part of the borrowing cost should be transferred to P&L. Okay. So what is the latter of three dates? 1/4/21 date of taking of loan, date of commencement activity 31st/3/22, 31st August 2020 is the date of expenditure. What the capitalization of the interest starts from latter of three dates. Sorry. So for specific borrowings also the date is same. When should we start the capitalization of the interest? Latter of three dates. But here only for the purpose of calculation of the interest. Only for the purpose of the calculation of the interest while taking of the time period, I should take the latter of two dates for the commencement activity. For the commencement of the, for the starting of the time period. Now, the capitalization of the borrowing cost should start from latter of following three dates: date of taking of loan, date of starting of construction activities, date of expenditure. So this period should be transferred to P&L because the date of expenditure is start. The later of three dates is begins from here. From here onwards, I should add it to the cost of the asset. I should added the expenses. I should added the interest expenses to the cost of the asset. And I should stop capitalization of the interest from the date of asset is ready to use. If the construction is completed, I assume that asset is ready to use. Okay. Generally, in this example, I assumed, so for the normally in this example, Substantial period is less than 12 months, but generally, for example purpose only I am given. Here I have taken an assumption. Assumed so many periods: 9 September, October, November, December, Jan, Feb, March. So assumed substantial period equal to 7 months here. Okay. But generally, what is the substantial period? 12 months only. In question itself also, if the substantial period is less than 12 months, assume it is not a substantial, assume it is a not a qualifying asset. The expenditure incurred on such asset should be transferred to P&L. But in this example, I assumed it substantial period is 7 months. But don't take this assumption in the answers. Now, this period interest should be transferred to P&L. And this period interest should be transferred to added to the cost of the asset. Here the journal is interest account debit to cash. Here also interest account debit to cash. But here interest should be transferred to P&L. But here interest should be added to the cost of asset, means qualifying asset account debit to interest account. So for the calculation of this interest, I should use the above formula, debit and credit amounts. Okay. Then with respect to the general borrowings, calculation of the interest rate is difficult. Let's see how to calculate the interest rate. Interest rate for the general borrowings. Weighted average interest rates for the general borrowings. Total actual interest borrowings for the year. So let's see one problem, then you will get the clarity. Question number 2. Question number 2. On 1st April 2002. So this is date of construction. And it obtained 2 lakh specific loan to finance the construction of the building. So date of taking of loan equal to 2 lakh. Okay, date of taking of loan equal to how much? Sorry, what's the date? So 1st April 2022. So date of loan, and it is a specific loan. This 2 loan is a specific loan. And what is the interest rate? 10%. The company's other outstanding non-specific loans means these are general borrowings. These are general borrowings. What are the general borrowings? 12 lakh, 40 lakh, 16 lakh. These are the interest rate. These are the expenditures. So this is the date of taking of loan. What is the date of expenditures? Date of expenditure. This is also date of expenditure. This is also date of expenditures. Expenditure incurred on construction of building 6 lakh, 1 lakh 50, 3 lakh and 12 lakh. Then the construction of the building is completed on 31st December 2022. When the construction is beginning, completed on 31st 12 2022. So 31st 12 2022. So what happened here? What is the period of construction? Period of construction equal to April, May, June, July, August, September, October, November, December. Period of time 12 months. In that case, all the expenditure incurred. What are the expenditure incurred? So construction of building. So the interest paid on all these loans should be transferred to P&L. So it is not a qualifying asset. Since time to construct a building is not a substantial period of time, then entire interest should be transferred to P&L. Then I no need to find out the interest amount, capitalized interest amount, right? So there is no need of differentiation. What is the capitalized interest? What is the normal interest? In that case, entire interest should be transferred to P&L. And again, what is the next one? A sum of 20 lakhs has been advanced for the purchase of plant and machinery, which was installed by 31st March. So it has been just purchased the plant and machinery. It will not take substantial period of time, right, for getting it ready in use. So then 20 lakhs should also be, no, not. This is also not a qualifying asset. Plant and machinery also not a qualifying asset. So the expenditure paid on this 20 lakhs loan should also be transferred to P&L account only. Then 29 lakhs has been utilized for the working capital requirement. This is also a not a qualifying asset. So interest should be charged to P&L. Then what is the total interest here they paid? Let's see what is the total interest. So this is total interest. So 2 lakh is the specific loan, 2 lakh into, it has taken the loan on 1/4/2022. So I need to calculate the interest for 1 year. So it has been outstanding for the entire year. Assume 2 lakh into 12%. Then for the remaining 12 months, it is 13%. For 40 lakh, 14%. For 16 lakh, it is 15.5%. Okay. So what is the total, what is the amount of the time, sorry, what is the period of the time the loan has been outstanding during the year? So for during the year, it has been outstanding for 12 months. For during the year, how much period has been outstanding? So it has been started from 7. So it is 9 months. April, May, June. 3 months are expired. So, right? Yeah, 3 months are expired. Then this loan has been outstanding for only 6 months. So 12, 9, 9. These are the time periods we should calculate the interest. 12, 9. So what is the total interest? 7,20,000 is the total interest for the entire loan. This entire 1 lakh, 7,20,000 should be transferred to P&L because we haven't incurred any expenditure on qualifying asset. Then open the question number 3. What is the question number 3? So X Limited has a treasury department that arranges the funds for all the requirements of the company, including fund expansion program. And during the year ending 31st March 2022, the company commenced construction of qualifying asset. Company commenced construction of qualifying asset. Link at the following of expenditures. These are the date of expenditure. This is also. What is the date of commencement? So during the year 31st March 2022, the company commenced the construction of qualifying asset. So 1/4/2022. Date of 31st March. Okay. So what does it mean? It commenced the construction activities. last year. So assume that if the loan is outstanding from the last year, assume date of taking of loan equal to beginning of the year. So that is 1/4/21. Then only it is easy to find out the interest for the calculation of the interest for the respective year. Okay. So compute the borrowing cost that need to be capitalized. Compute the borrowing cost that need to be capitalized. Now, all these are general borrowings only. There is no specific borrowings. So I need to find out the interest. I need to find out the interest rate, right? So let's see what is the formula for the calculation of the interest. Weighted average borrowing cost equal to weighted average borrowing rate equal to total actual interest divided by total weighted average borrowings. What is the total actual interest? It has been given in the question 1,65,000. Take directly. If it has been not given directly, you should calculate this interest portion. If the interest is not given directly, they have given that this is 10% interest. We have paid 15% interest on this. For example, I am saying. So without this calculation, they have given directly. So I have taken the 1,65,000. Then what is the total weighted average borrowings? What is the total weighted average borrowings? What is the total weighted average borrowings? 15 lakhs. 15 lakhs is the total weighted average borrowings. 15 lakhs. What is the actual interest? 1,65,000. So 1,65,000 divided by 15 lakhs into 100, then I got the weighted average borrowing rate. Weighted average borrowing rate for the general borrowings. So let's see. Date of expenditure 1st July and 1st December. Date of expenditure 1st July and 1st December. What is the amount? 2,50,000, 3 lakh. So category. So out of this 3 lakh, 2 lakh 50, what is the mean? This 2,50,000 is incurred out of which loan? General borrowings are specific borrowings. Here specific loans are not there. So this 2,50,000, sorry, this 2,50,000 is incurred out of general borrowings. So what is the formula for the capitalization of the interest for the general borrowings? Expenditure incurred into what is the rate of interest? 11%. The rate of interest for the general borrowings, total actual interest divided by total weighted average borrowings into what is the period? What is the first date? Date of loan 1/4/21 and date of 1/4/21, but the date of expenditure is 1/7, 1st July. So latter 3 dates is the 1st July. So it has been started from the 1st July and the loan is outstanding for the entire year and the construction is also not completed during the year. So I need to calculate the interest up to the at the end of the year. So 1st July to 31st December, how many months? It is 9 months. Then after that, what is the remaining amount? 3 lakhs. 3 lakhs into 11% into when here has been expenditure. That is the latter 3 dates. So December, 4 months. So I should calculate the interest for 4 months. So total interest to be capitalized for financial year 21-22 is 31,625. 31,000. Okay. So that is the interest. Then so let's see question number 4. Then we will get the better clarity. Okay. So it will cover so many aspects. Question number 4. On 1st April 2001, the entity A contracted for the construction of the building for 22 lakhs. The entity A contracted for the construction of the building for 22 lakhs. This information is irrelevant. But what information is relevant? Construction of the building is started from date of construction 1st April. And the land under the building is recorded as a separate asset. it should be recorded as a separate asset, and it is not form part of, so then there is no need to uh, the interest on the loan taken for the acquisition of the land. Second thing, the building was completed at the end of the year 22. Construction is completed on 1st April 21, completed on 31st March. So 12 months. 12 months period is called qualifying, 12 months period is called substantial period of time. So the given asset is a qualifying asset. So the expenditure incurred on the qualifying asset, the expenditure the interest expenses on the qualifying asset should be transferred to transferred to the cost of the asset. Let's see the date of expenditures. The following payments. This is the date of expenditure. Then entity says borrowing rate. Entity says borrowings at the year end 31st March 2002 was as follows. 10% is 4-year note with simple interest payable annually, which relates specifically to the project. And debt outstanding on 31st March 2001 amounted to 7 lakh rupees, and interest of 60,000 was incurred on these borrowings. An interest income of 20,000 was earned on these funds, while that were held in anticipation of payment. So this is specific borrowings, because they use the word which relates specifically to the project. What is the specific borrowings here? 10% interest rate. So what is the loan amount? First, specific borrowings are 7 lakh rupees. Specific borrowings are 7 lakhs rupees. Interest rate is 10%. Interest rate is 10%, and they're giving the interest amount also. What is the interest amount? Interest amount is 65,000, and we have incurred 20,000 rupees on these funds. So interest income 20,000. So what is the net interest? Net interest is 65,000 minus 20,000, 45,000 rupees. This is the net interest. Okay. So you no need to calculate the interest amount 7 lakh rupees into 10%, because they haven't mentioned when they have taken the loan. So they directly give the interest amount 65,000. Then you no need to calculate the again 7 lakh into 10%. If you do that, it means you have calculated the interest for 1 year, but it has not mentioned what is the date of taking of the loan. So I need only interest, right? So just take directly 40,000 is the net interest, and after that, so 12.5% of 10 lakh borrowings, which are general borrowings, and 10% of 15 lakh borrowings, which are general borrowings. Both are have been outstanding from 1st April to the date of number. Question number. General borrowings 25 lakh rupees. 1 minute. Okay. What are the general borrowings? 25 lakh rupees at the rate of 11%. How we got 11% is, first I need to find out the weighted average borrowing rate for the general borrowings. What is the weighted average borrowing into 12, 12 by 12? 15 for the entire year into 12 by 12. So this is the weighted borrowing. What is the formula? Weighted average borrowing rate into, so total actual interest divided by the total weighted average borrowings into 100, then I got the 11 percentage. So this is the weighted average borrowing rate formula, 11 percentage. Specific borrowings interest rate 10 percentage, but we no need to do that. What is the date of expenditure? 1st April, 30th June, 31st December, 31st March. Take those dates and take the amounts. So 2 lakh, 6 lakh, 12 lakh, 2 lakh, 22 lakh total. So what is the general rule? We should use the specific borrowings first. So as per Index 23, the expenditure should be of specific borrowings first. And after specific borrowings, we will capitalization of specific borrowings. That is the default assumption in general borrowing. Sorry, in Index 23. In Index 23. So I have incurred 2 lakh rupees. First, what is the basic assumption? What is the default assumption? The amount should be utilized out of specific first. What is the specific borrowings here? 7 lakh rupees are available. So these 2 lakhs are utilized out of this 7 lakh rupees. And after that, on 30th June 2001, what is the specific borrowings? Sorry, what is the total amount expenditure? 6 lakhs. Out of 6 lakhs, 5 lakhs are incurred from specific borrowings because total I have taken loan of 7 lakh. Out of 7 lakh, I have already utilized 2 lakh rupees. What is the balancing amount in specific borrowings? 5 lakh rupees. So I need to find out the interest on specific borrowings. 2 lakhs and 5 lakhs. They have given directly 65,000 is the total interest on specific borrowings. So you are not supposed to do that 7 lakh into 10 percentage. So directly they are given, take that amount. Coming to general borrowings. These general borrowings, what is the formula? What is the expenditure amount? 1 lakh rupees into what is the rate of interest? 11 percentage into what is the period? So the period starts from the later of the following dates. 30th June is the later. So 9 divided by 12 into 8 to 8. 9 divided by 12. So 1 lakh into 11% into 9 by 12, 8,250. Then coming to 31st December 2001, 12 lakh rupees. This 12 lakhs is incurred out of general borrowings. 12 lakh into 11% into 3 by 12. This period starts from later of 3 dates is the 31st December. So 33,000. And after that, entire amount has been incurred out of general borrowings. But it has been this has been incurred on 31st March. Then what is the period here? 0. Then it becomes 0. So this is the total interest cost 1,06,250. But out of this interest income is there, right? 20,000. That should be deducted. So net interest cost 86,250 should be capitalized to the cost of the asset. So no need to find out the interest cost with respect to specific borrowings because already given in the question. If you wanted to find out it, if you wanted to find it out manually, it is going to be wrong because here I don't know what is the date of taking of the loan. If the date of taking of loan is in 1st April, then the interest amount should be 70,000. But the interest amount is 65,000, which has been given directly. So you should use that amount for this 20 lakhs and for this 6 lakh. Combinedly, the interest amount is 65,000. Okay. And the remaining problems we will discuss by tomorrow. Okay. So only 2 problems is there, 2 concepts is there. Once we have discussed it, in days 23 is going to be also completed.